Good afternoon, my student. Hello, welcome to this session. I hope in this recording clarifies the effect of interest rate and tax rate on return on assets and return on common equity. I will explain this effect by the following example from New Look Corporation for 2020. We have information about net income and average total assets and average common owners equity and sales, tax rate, interest rate, and long-term debts. First of all, we need to compute return on assets and return on common equity without any decrease or increase in interest rate and tax rate. The second point, we need to compute return on assets and return on common equity if tax rate decreases from 40% to 20%. What is your conclusion after that? And then we need to compute return on assets and return on common equity if interest rate increases or decreases from $10,000 to $5,000. Now we will present the solution. Now, please, my student, be careful and follow me from the following equations of return on assets. Return on assets, as you know, equal net income plus net interest expense multiplied by y minus tax rate over average total assets. Yeah, now you will put the numbers 60,000 net income plus 10,000 interest expense multiplied by 1 minus tax rate over average total assets. You will find that return on assets will be 8.25%. Remember this number. Then we compute again return income and equity, net income minus preferred dividends if we have preferred dividends, but in this example there is no preferred shares, over average owners equity. Here we talk about only common equity, so if we have any preferred shares we will exclude it from the average owners equity. Yeah, so when we divide 60,000 over 500,000 will be 12% as a return in common equity. Now this is the numbers of return on assets and the return on common equity without increase or decrease in tax rate or interest rate. Now, we want to compute now in the second stage return on common equity and return on assets if the tax rate decreases from 40% to 20% here. So first of all, we need to compute and calculate net income under this assumption by computing the net income before old tax rate. Net income over 1 minus tax rate equal 60,000 over 1 minus 40% equal 100%. This number is net income before tax. Now, to clarify it more, we draw the following table. In this column, before what? Before when tax rate is 40%, and this column is after what? After tax rate when tax rate is 20%. Now, net income before tax is $100,000 and $100,000. Then we deduct tax expense 40%, 40,000, 20%, 20,000. So net income will be 60,000 in all assumptions, and now net income will be 80,000. So you can note it's very clear that our net income or in New Look Corporation net income increase from 60 to $80,000 by $20,000. Now we have a new net income and we have a new ratio or rate of tax rate Now we can now calculate return on assets and return on common equity with the new findings. Yup, this is a new net income and this is a new tax rate. So return on assets will be 11%. You can note that the previous return on assets is 8.25%, but now is 11%. This means that return on assets increase and return on common equity also increase because it will be 15.69%. But before that, you should be note that we divide 80,000 over $500,000 as owner's equity, average owner's equity plus average decrease or increase in net income from 60,000 to 80,000. So we increase it by the average because we use here average. Then you should add the average also, average of 20,000 over 2. If we have a decrease in net income, you should put here minus 20,000 over 2. So it's clear that we can take the following equation. Please put your conclusion, my student. Yeah, that's right. When tax rate decreases, return on assets and return on common equity will be increased, and vice versa. So the relationship between them is negative relationship. In the third stage, we want to explain the effect of interest rate change. So in this example, we assume that interest expense decreases from 10,000 to 5,000. Now again, at the same procedure, we need to calculate net income before interest and tax. And here we compute net income before tax as the last procedures. We have net income before tax will be 100,000. Then we compute net income before expenses. So interest expenses all equal 100 plus 10,000 interest expense. So we have 110,000. You can understand it well more by the following table. This table is earning before interest and tax, before when interest expense is 10,000 equal 110, and here also we have 110 minus in all the expenses in all the assumptions 10,000, but in the new assumptions we have interest expense is only 5,000. After you finish computation, you will get that the net income of a New Look Corporation will be 63,000. So we note that the net income increased from 60 to 63 by $3,000. Now again, you can easily calculate return on common equity and return on assets. So return on assets here is will be 8.25. So there is no effect on return on assets when the interest rate or interest expense decrease. But when we compute return on common equity, we will have a new number 15.95%. Also, we will show that net return on common equity will be increased. So our inclusion or our conclusions, we can summary them on the following smart table. You should understand it well and rehearse it again to understand it well. So if tax rate increase, the return on assets and return on common equity will be decreased. So the relationship between them is negative relationship, while when interest rate increase or decrease, there is no effect on return on assets, but return on common equity will be decreased. So the relationship between return on common equity and interest rate is also negative relationship. This means that return on asset does not differentiate between the type or sources of funds in financing our resources, while return on common equity no differentiate between type of or sources of funds and concentrates more on owners equity fundings funds. My student, after that you can rehearse the recording again, and then you can go to your material in Blackboard course. Maybe you will be able to solve all assignment inserted in. And if you have any information, any comments, any questions, you can contact me via Blackboard email. Good luck, my student.